Welcome everyone to another Credit Safe webinar. I want to thank you for being with us here today. I'm excited to have this webinar going on today. We do a lot of these, but they all have their purpose and they all get to have a different perspective and focus area, and I just love getting to be a part of them. My name is Nathan Kolb. I am the host for Credit Safe webinars and am the brand engagement head for Credit Safe. So I want to welcome you on behalf of Credit Safe. And I want to give you a little bit of a background, a little bit of information here that will let you know how this all works before we jump right into everything. First and foremost is we want this to be a discussion. We want this to be a part of what happens in the webinar is that you can interact with us. So there is at the bottom of your screen a little thing that says Q&A. You can absolutely go ahead and type a question at any time. I will be monitoring that the entire time, and we will be answering these throughout the discussion today with our speakers. So as we go, if you have a question, don't hesitate, just type it on in, send it along, and as soon as I can and mix it into the conversation, I will ask that question and we will kind of go from there with it. I also want to let you know that there will be a poll. Sometimes we have polls here. We have a poll with 3 questions that will be put up in the middle of the webinar to get some information from you guys that will help inform the discussion that we're having. It will be up for 3 minutes. So as you see it, go ahead, answer those questions. It's nothing crazy, nothing hard. And then we'll use that information to, like I said, inform the discussion that we have. I want to let you know as well that this is being recorded. So just for privacy purposes, we need to let you know this is being recorded, but it also gives you the benefit that this will be a recording that will be available to you about 24 to 48 hours after the conclusion of this webinar. And you'll receive an email from me that will let you know how to access that, as well as any other links or information or supporting things that we talk about during the discussion. We'll put all that in there. You'll have all that information. It'll be ready for you. Today, we're focusing on the region of South America. We've been doing this series throughout the series where we've focused on different regions. We've talked about Europe, China, Southeast Asia, and now we're talking about South America. And very excited to be doing that. Specifically, we're going to be focusing on the credit aspect of that region, obviously being credit safe and being in the credit industry. That's what we're going to be focused on, how COVID has affected that area and the opportunities that are there. We always want to look at those opportunities in any region that we look at. We're very excited to have our speaker today. Mike Trelevin is the Vice President of Credit Specialties for Marsh. He has 16 years of brokering experience with international risk consultants, JLT and Marsh. Marsh, if you don't know, is the largest credit insurance brokerage in the world with 800 colleagues in over 55 countries. Mike graduated from John Carroll University. He lives in Chicago. He actually had the Cubbies on here, something on them in the background there. Lives there with his wife and 2 sons. And as we found out, is an avid golfer because he cut enough time out of his schedule just to be here. He actually just came off the course, and I told him I was going to give him some trouble for that, and he is. But, you know, at least we don't have to watch you swing and join you on the course. You were able to come back. But Mike, thanks for joining us.
Oh, thanks, Nathan. I probably would be better at giving a golf instruction than talking about, you know, the nuances of doing business in South America, given its complexities, but I will do my best.
Well, you know, that's another webinar to happen. We'll all go out on the golf course and we'll just do it from there. Since everybody's working remote anyway, you know, we might as well do it from there, right?
Right.
Awesome. So I want to kind of just jump in with some obvious questions that we've talked, you know, we've prepared. And then as I had said, folks, you know, please go ahead and join in with some questions. But the first one, just, hey, everybody knows things have changed since the beginning of this year. Let's just say 2020 has been kind of that apocalyptic year for everybody. What in South America have we seen been the changes over, say, the last 6 to 8 months?
Sure. So, you know, just in general, you know, obviously with COVID and the global pandemic, it's one of those unique situations that's created not only a health crisis, but also an economic crisis. Mm-hmm. So we've seen it kind of sweep across the globe. Asia is now kind of recovering from it. Europe, along, you know, a little bit behind them, but in the U.S., we're fully entrenched, as is South America. You know, they took some very strong measures throughout South America, different countries taking different measures. but some of the stronger economies like Chile at the time and Peru went to complete lockdown. So, within the last couple of months, it's definitely been a very difficult market from a credit perspective, from just a general life perspective. So people's focuses are very much like our own, on their families, on making sure that their health is there. So, the business environment has to adapt to that and adjust to that just as much here. But as we had certain geographies in the United States shut down, these were full country measures. So it wasn't industry specific. It wasn't, it hit everybody at the same time, essentially. So this is a very unique time, and we're kind of learning our way through this. Certainly as credit professionals and as business professionals, just trying to figure out what the new normal is going to be. And we're not even close to it yet. We are just now tip of the iceberg stuff, trying to figure out how everybody is going to be long-term impacted by this.
Right. Now we know that, the South American economy, like you mentioned, it wasn't exactly as well positioned to handle this type of a thing as, say, some other countries in the world, or some other regions. I should say regions, because there's multiple countries, obviously, that make up South America. Has that played a factor in this whole thing?
Yeah, I mean, I think so. You look at population density, you look at hygiene. It's just in general, there obviously is some, I would say, more desperate areas of these countries, and certainly, big and agricultural. Those are places here in the U.S. that we've seen that are that workforce has been heavily impacted, and yet the demand is still there. So, I think they're working their way through it. Some countries obviously are in better position than others. Some were in rough spots before it even started. Argentina has gone through their, every 5-year kind of crisis. Brazil constantly has political events that are going on that are creating. And Brazil, obviously, right now probably has the highest number of cases for COVID. And again, it's just kind of starting there. They're probably a month or two behind us. So it is a bit of a wait and see game. Unfortunately, I wish we could have some more definitive answers as to when and where these countries are going to come out. But at the end of the day, I don't think it changes too much from a credit perspective, because there's still good customers in those markets that are in industries that are essential. So it's about doing deals that make sense, which is no different than any other time. I would say the biggest difference now, what you need to do is you need to get the most updated information possible, because 2019 year-end financial numbers don't mean anything right now. We need up to the date quarterly end. So if you are doing business in South America and you want to do business in South America, I think it's good to get your customer in the routine of sending you updated financial information to see where they're at. Part of what I do as a credit insurance professional is I help our clients find liquidity solutions. And, while the credit insurance market is fairly mature in South America, I think that there is some work to be done because there is, a concern for liquidity overall. Companies globally have drawn down their credit facilities from their banks at a rampant rate. So it is concerning, and that's why it's important to get as much frequent information in those snapshots as to where your customer, is, how they're impacted by COVID. The other thing too is, and just like I said, I think a big part of this is the communication aspect. So if you don't have a good relationship with that customer, now is the time to start reaching out and feeling out their concerns, how this has impacted them specifically, because everyone's going to be a little bit different, whether it's from a liquidity standpoint, whether it's from a regionalized, impact of like how heavily that little pocket has been hit, because it could be nobody has gone to the offices, nobody has gone out to the fields to work in those certain regions. So it's very important that you kind of get the micro level of information. And the only way to do that is pick up the phone, schedule a Zoom call. I would used to say it's very important to go down to South America and shake hands with those customers, meet them, know what their families' names are, because at the end of the day, what I've seen is customers that get paid well in South America have very good personal relationships as well as business relationships with their clients there. Right.
Yeah, and it's funny being with CreditSafe and you're one of our partners and have worked with us, but knowing that we are the information, business information people, And I've heard our country manager, our managing director, our CEO all say the same thing. It does not, no matter how much data we give, no matter how much we can put out, it does not take the place of a relationship. You've got to still have that relationship, especially with those international customers that you got to know something. You got to have that give and take with them. So I love that you're hitting that. Even if it makes it sound like you should cut us out, don't cut us out. We're going to provide that information for you, but then also have that personal relationship.
I think it's a great point. I think this has been a saying since the Reagan era was trust but verify, yes. Right? So yes. Yeah, you can have these great relationships with your customers, but it's also nice to get some third-party data to make sure that you're doing the right thing for your stakeholders here. It's great to have trust and relationships, but that third-party information, whether it be through an third-party information provider, whether it be through credit insurance, which is a market that I work in. So, yeah, there's no reasons not to have belt and suspenders, especially in this environment.
Right. Yeah, you might want belt, suspenders, and a rope right now with everything that's going on. It might help. So are we seeing anything from you mentioned that whole countries were being shut down with governmental regulation and just kind of a more of a heavy-handed approach than what we've seen in certain areas of certainly the US, but also in other countries. Have you seen any significant changes that have really affected those businesses in whatever country from that region that are affecting the interactions with the US?
Yeah, and it's across the board. I don't mean to generalize, but it is certainly, everybody is impacted. I don't care if you were, the equivalent of a AAA rated company. To my point earlier, these companies have drawn down significantly on their borrowing facilities and things like that. So again, it's just important to realize where that specific customer is at this point in time. To make generalities, I think, is very dangerous because, again, there can be very quality customers in difficult environments, and that's really where the opportunity lies. If you can sort through kind of the weeds and the mud on that, now is the time that if you're especially a good partner for companies that are going through maybe a little bit of a rough patch, this is where you solidify long-term quality relationships, as long as the deal makes sense. Obviously, you don't want to be reckless, and I would say you don't want to be overly opportunistic here. Sure. There is a degree of clients kind of going through different suppliers because they haven't had the ability to pay, down that line. So, let's say a supplier of a good that you are selling, a competitor of yours may have still be sitting there, holding the bag, waiting to get paid, and they moved on, and now your sales guy saying, "Hey, I just got a great deal, a big order from a customer that I've been after a while because they've been working with a competitor." Well, you got to ask yourself, why is it that they're not working with that competitor? If it's because they're not paying that supplier, then obviously that's a big red flag, and the sale is only as good as until you get paid. So I would just say be cautious, but at the same time still be be seeking opportunity. There's definitely opportunity, and from a credit insurance perspective, there's still capacity, there's still appetite. I would say the credit insurance underwriters are asking just for the information that I just stated. They're just looking for more up-to-date information. They're looking for some more context behind why doing business with that customer, whether it be a new customer or existing customer at increased levels, is a good idea. These pass the smell test pretty quickly. Does the deal make sense? Is there a demand for your product in that country? And if all those boxes are checked, then you can take it to the next level and figure out, okay, are we going to extend repayment terms? Are we going to require cash in advance? Are we going to require a letter of credit? So then you have that pyramid of risk products that kind of can help you make the sale in a safe way. You don't want to be too restrictive with your payment terms because you want to increase your business and understanding that your customer has maybe some of these liquidity concerns. They definitely are going to be demanding terms, but whether that's a thing that's right for your customer or not, that's up to you to figure out how to get the deal done.
Right. And when you're talking about opportunities, have you seen any significant opportunities in South America that have changed since the beginning of the year with everything going on? Are there certain industries that are growing or products that are being required either from South America or back to South America that we weren't seeing prior to this?
Well, I don't think it's too different than in our domestic consumption or our demand for products. So, healthcare products, industrial products, things that will weather a pandemic that are deemed essential, and it's no different than the U.S. We've seen obviously big impact in the retail space, big impact in not necessarily grocery retail but in food distribution, right? So people that distributed through to schools and other hotel entertainment type businesses, that's just bad business right now, and it's unfortunate. I wish I had a good story for you to be like, hey, here's a really good opportunity, but unfortunately, because again, this has affected everybody kind of at the same time. It is definitely a time to be very cautious and get the information. So I wish I had a silver bullet for you to say, hey, if you're selling this widget, now is the time to go into Brazil, or now is the time to go to Chile or Peru. But unfortunately, everyone's dealing with this in their own way, and there is no there is no Teflon vest for a global pandemic, unfortunately.
Right. So if I'm understanding you correctly, basically we're looking at the big opportunity here for American companies especially is to solidify or to grow those relationships that they already had. And really kind of make that a priority as we're going through this. Is that fair to say?
Yeah, it is. And I'll say there's tools obviously that can help you either secure new business or retain existing business and keep those channels open. From a credit insurance perspective, and this is no different than actually from a credit information perspective, but if you have good resources, like a good insurance product or carrier or a good information provider, you're going to be able to react faster to there's going to be an uptick in demand. Once things start to normalize and level out, there's going to be a new opportunity to grow business or a new opportunity to get new business. But if you have a good insurance program or you have a good information provider that's providing you timely information on a regular basis, you're going to be able to react much faster than your competitor that doesn't have a solution in place right now. So while you think, okay, is now the time to do it, yesterday was the time to get credit insurance and good credit information, because those that have it right now are going to be able to react much faster and gain that market share as things start to go back to normal, whereas companies that don't have those resources are going to have to pause and say, the world has changed in the last 6 months. Should I be extending the similar amount of credit that I was extending before? What's the right level of credit that I should extend? How much insight do I have to the credit worthiness of my customer? And clients of ours, Credit Safe and Marsh credit insured clients, they already have those mechanisms in place. So they're going to be able to react much faster and gain that sale ahead of their competition.
Right. Yeah. Take advantage of that opportunity that when it does start showing up.
Yeah, and I don't mean to sound like an infomercial for those two products, but it's the God honest truth. I mean, you can't go into this thing blindly and say, oh, I just got an order, a big order here, and then extend terms. In South America, particularly even before the pandemic, it was something that you had to do. You had to have good information sources, and you had to mitigate risk, whether that be through the different mechanisms of payment. Cash in advance, works great. Letters of credit work great, and so does open account terms. Now, what you do to mitigate the risk on the open account, that's obviously where we can help you. But getting the information on the front end, that's obviously where Credit Safe can help.
Absolutely. Yeah, we don't mind those infomercials. I mean, it's our platform. We're okay with this. We're good with that. So what I want to do is I want to pause just 1 second, folks. I'm going to send that poll out. So that poll will be out there for the next 3 minutes for you. So please go ahead, take a chance or take advantage of that. Give us some information there, and that'll help inform the rest of our discussions here. But I want to ask a question that I ask of all of our international type webinars that we do, Mike, and it's what are some 2 or 3 things, a few things, whatever works for you, that businesses in America get wrong, mess up, do something dumb when they look to expand within South America. Whether you want to look at a specific country or two or the whole region, what are some of those things?
Well, I mentioned it earlier. First and foremost, make sure that you're establishing relationships with those customers. I think that's something that we get wrong all the time here because we try to trust the data. We think that there's sources that can go beyond, a handshake relationship. Obviously, that's not possible right now. You're not going to want to be traveling, but Zoom has obviously proven to be a great platform to meet face-to-face and start getting those relationships. The second one is from a banking standpoint. Most U.S. companies will start by invoicing U.S. dollar invoices to any country. And then what happens is you're putting the stress on the customer to be able to get their hands on U.S. dollars. And certainly in a lot of these markets, specifically in South America, is they don't always have easy access to U.S. dollar, and the central banks in these countries control that, and that could be a major cause, and that's actually probably the number one cause for non-payment coming out of South America is the currency convertibility issue. So I would say be open-minded to invoice in local currency and use your banking partners to hedge those currency fluctuations, because you're going to, again, it's another way to stay competitive. Not only providing terms to your customers is going to be the most friendly, relationship friendly, advantageous for your customer, but also if you're able to invoice in the local currency and in the background mitigate that risk through banking products to hedge that risk. So it seems like it's very, pretty obvious and pretty straightforward, but it's something that most American companies don't do. They want their invoices to be out in U.S. dollars, but they don't necessarily fully understand the stress that it's going to put on their local customer that doesn't necessarily have a bunch of U.S. dollars sitting in their bank account. Right.
That's great. Yeah, I actually have not heard that from any of our folks from the international that talk about international. That's a great point. It makes complete sense, especially during this time with the pandemic. It makes it even harder for currency to be transferred and things like that. So that makes great sense. So we got a couple more seconds here on the poll. So, and then I'm going to talk to Mike about that here and going. And then we have a few more questions. But again, feel free, folks, to send in your questions and go on and do that. And the poll's going to end here in just a second. We'll get the results. There we go. So, Mike, you and I talked about the poll ahead of time, so I want to give you kind of some of the results. So, with the question of COVID-19 impacting the company interactions with American businesses, we've had kind of a moderate to significant effect has been the big thing. Most folks have seen somewhat in that, which tracks right with what you were saying. I think maybe I'm wrong, maybe I'm naive in saying this, but I think our own cutback in business and in what we've done has kind of mitigated some of that as well. We're not able to do as much, so we can't be as impacted quite as much with all of that. I find it interesting, based on what you were saying just now, that actually 75% of the respondents think that American companies are somewhat well-positioned, decently well-positioned to actually leverage opportunities in South America. Is that what you're seeing from your perspective?
I think what it's doing is it's forcing companies to look outside of the U.S. for market share. There may be limited or certain limitations on what is available for them to do in the U.S. So if nothing else, it's an opportunity to kind of expand their horizon. Like I said, the globe is in different timing stages of the COVID impact. So now is certainly the time to kind of look to the east, and say, okay, maybe there's some opportunities in the Pacific region right now that is starting to build up, because there is going to be, one thing that we definitely have seen, we've seen this pent up demand. I mean, we kind of felt like, obviously we had, what was it, April, May, June, we were kind of going through like the real shutdowns in the U.S., but then July and August have a little bit of a freeing up. Unfortunately, there's been a kind of a second wave, but we kind of got a sense to see where that pent up demand was, and it was stored up. So, we saw a pretty certainly decent retail numbers in July and August, right? People wanted to get out and start spending some money and getting out to restaurants and things like that. Unfortunately, we've seen kind of a second uptick or a surge, I guess using words that they use on the news networks, but it's unfortunate because we're kind of going through this second. I mean, just locally here where I live in Chicago, we're seeing certain areas get shut down. Certain towns and neighborhoods that are going, where the restaurants and bars were open for indoor seating, now they're back to the outdoor, if not at all. So it's just, I think the uncertainty is really the daunting part of this. And, I always tell anybody that is around me personally and professionally is, we all got to take a deep breath and realize that, hopefully we find a way to get through this. And there's going to be that demand on the other end. So, and there's demand now in certain areas. So just try to keep your head on a swivel and look for where those pockets are opening up. And eventually, if you stay, in the game with those relationships, there's going to be opportunity I think, to recover really quickly.
Absolutely. Absolutely. And then the last poll question that I kind of love seeing this, and this is why these people, I'm sure several of these people are here, is, was in the next 12 months, do you expect your company's interaction with South American businesses to what? And 50% of the folks said to increase. So, that's definitely promising, not only for our own economy, but for the South American prospects, unless I'm misunderstanding that.
No, I think it's a great point. I think the other thing that U.S. companies need to realize is that there's a cachet on U.S. products. There's a trust level globally of made in the USA, and whether it's right or wrong, made in China has a little stigma on it right now, and I know a lot of companies are sourcing those products from China, but we're seeing a little bit of a shift or a kind of a reshoring of U.S. jobs and manufacturing, obviously before the pandemic, but I think foreign markets are going to be seeking trusted sources of supply, and I think the U.S. market has that in spades. When it comes to who's going to come out of this okay. Obviously, we are not just pandemic, but we're also in an election year. And I didn't mention that earlier, but all these little wrinkles that are creating stuff. I always said everything's temporary. So hopefully we get through this. We'll get through this election year. But at the end of the day, the one thing that's going to, I think, to remain strong is the made in the USA, or working with U.S. partners from a trust, not just on the people side, but on the product side. So I think certainly that's going to continue to expand. I think we've seen that for a long time now, but I do think that there's always opportunity, especially for companies or buyers that want quality product. And, I think that I don't think will change in the long term.
Okay. And you kind of hit on this, but I want to ask this kind of pointedly. If you were, set out your crystal ball and somebody hired you because you're this great prognosticator of abilities here in South America, what would you be telling them to position themselves? How should they position themselves? What should they be doing now to make sure that they can take advantage of those opportunities as soon as they creep up?
Well, I mean, from a credit professional standpoint, first and foremost, I mean, have a standard set of credit procedures that you can follow. Make sure that your information providers are providing you with timely information, and establish those relationships. And have multiple sources. You just don't need one source of information. And now, even though the market's difficult, from a credit insurance perspective, it's never a bad time to start a relationship with a credit insurer. There's the private sector out there, the large, Eulers, Cofos's, and Atradiuses of the world. And while their appetite and the limits that they're approving may be on the low end, there's ways to structure those policies too, to kind of have it course correct over time. So you shouldn't be in a position where you're going to overpay for a policy now, because right now, if they're not transferring a lot of risk, you can start small and build it up. The other thing I would say is the Export-Import Bank, which is our U.S. government agency that provides credit insurance. They're reauthorized. They're at full force right now. They're really great at times of crisis. They are always going to be there to support exports of U.S. products. So just keep in mind that it has to be U.S. content. So more than 51% U.S. content. It has to be exported from the United States to the customer. But they have all shapes and sizes of products to help out U.S. exporters. I think at least a broad or general understanding of what they can help you with is good. So, local Department of Commerce, you have a lot of resources, brokers like myself, credit information resources like you guys kind of know, where to point your customers to get the information. But I would just say, stay open-minded, arm yourself with as much information as possible. If it's not, this just shows us that anything can happen, this pandemic. So I don't think you want to just be in a position of complacency and comfort. I think you always have to have some sort of contingency plan. And those contingency plans may be, getting yourself into a new information provider or a credit insurance product that can help you grow and leverage for not this crisis, but the next crisis. So I just think be prepared, be diligent, and And going back to what I've said this whole time is make sure those relationships are strong. Know your customer.
Mm-hmm.
You know, I mean, it can't be understated. It's just one of those things that, you know, that people take for granted. And I think, and again, going back to Zoom has, you know, leveled the playing field. I mean, we're also
Right.
used to it, and believe me, it's not this is the U.S. Phenomenon. I mean, I talk to my colleagues more than I ever have across the globe,
Right.
and you know, I know we're kind of Zoom fatigued here, but
Yes.
to establish those important relationships, use it.
Absolutely. Absolutely. Yeah, it's become a great tool, and something I don't think many of us would have thought of at the end of 2019 to be using the way that we are, you know,
Yep.
and doing all that. And with that being said, I mean, from what you've seen, has the infrastructure at all in South America taken any hit from the pandemic, from what's going on, from the lack of jobs going on right now and everything like that, to where this could be difficult depending on where you're trying to get a hold of?
I'm sorry, I'm not sure exactly.
So like, I mean, I know we have trouble here, even in the U.S., whether your internet's working that day, whether it's, you know, the bandwidth is working, the data coverage, those type of things. Are we seeing the same type of things in South America?
I haven't seen any, you know, major issues.
Okay.
Again, I think I mean, from a connectivity standpoint, I haven't seen that. I think because it's so widely utilized, and you know, I mean, Zoom or Microsoft Team or whatever platform they're using. Obviously, it requires a good internet connection. You're probably looking at more city, places that are less rural. You know, if they have a bad internet connection, then, you know, it is what it is. You know, and then, you know, hopefully you can use telephone and things like that, where it may not be face to face, but, you know, that it's just one level less of you know, getting that relationship solidified. I mean, you know, there's nothing to replace in-person breaking bread, you know, having a cheers, you know, before and after dinner. There's nothing that's going to replace that. But you just got to be creative and find ways to do it.
Yeah. Yeah. But you haven't seen that change in the infrastructure or anything like that for any, you know,
No, I haven't seen any. Yeah, I haven't seen any particular, like, you know, crisis or you know, anything that you can kind of point to that says, oh, well, if you're trying to get a hold of somebody in, you know, Brazil or in Argentina, you're not going to be able to do it because they have connectivity problems. If anything else, a lot of those places are actually well ahead of the U.S. as far as connectivity. Okay. They a lot of them will offer it as a public service, for example.
Right. So it's a little bit easier for them. That's great.
Sure.
Good to know. So any last thoughts or anything here? We're running up on a little bit on time here, so I want to make sure we kind of start curtailing the conversation. But any extra last thoughts that you want to make sure that everybody remembers as we start to say goodbye here?
No, I just want to tell everyone, you know, well, thanks for jumping on, and you know, hopefully things start turning around here in a little bit, and you know, obviously wish everyone good health and happiness, and hopefully, you know, together we'll get through this. I know it's cliche, but it's the truth. Everyone needs to kind of keep their cool, keep calm, be good to one another, but keep an open mind too. You know, we are going to be changing the way we do business, you know, from now on. Yes, there'll be some things that go back to normal, but a lot of things are going to be, you know, the new normal, as they've been saying. So I just think, you know, don't hesitate to reach out to your friends, to your resources, myself, Nathan. You know, I think we have a lot of, you know, genuine good advice to give, even though we may not have immediate solutions, but we have, I think, good ideas and at least good benchmarks and good feedback that we're seeing from our clients to be able to provide for a better environment for anybody that's either stepping into this for the first time or trying to figure out something that's maybe gone pear-shaped or it's not the way it used to be.
Sure. Well, Mike, thank you so much. Folks, thanks for joining us. I want to let you know there will be a connection link to Mike's LinkedIn. If you want to get a hold of him, talk to him outside of this, that'll be in the email that we're going to send out. And I want to invite you to our next webinar, which is next week on Wednesday. It is Compliance and Risk Management. It's another partner webinar. It'll conclude our series with our partner group, Sarala. So we'll be talking to the Credit Safe compliance expert and Chris Hutchinson, and then also Michael Kohler, the solution architect from Sorala. So join us then next Wednesday at 2 p.m. Eastern, 11 a.m. Pacific. And we are always glad that you're here. Look forward to connecting with you via email or LinkedIn, and look forward to seeing you next time. Thanks, everybody.